India's automobile sector, consisting of passenger vehicles, commercial vehicles, two-wheelers, three-wheelers and quadricycles, again ended the last financial year on a bleak note. Total dispatches from factories to dealerships declined 6% to 17.53 million units, marked by diverging performances among the segments. The sector's sales had peaked in 2018-19 when it sold 26.26 million units. India's two-wheeler segment was the worst hit by the pandemic, and it is still showing no signs of recovery. The segment reported its lowest wholesales in the last 10 years in FY22. Data from the Society of Indian Automobile Manufacturers shows. After falling almost 18% in FY20, two-wheeler sales dipped further by 13% in FY21 and another 11% last fiscal to 13.47 million units, the lowest since 2011-12. Two-wheeler dispatches are currently just 64% of the 2018-19 level when the segment scaled a high of 21.18 million units. On the other hand, the cost of ownership of passenger vehicles and two-wheelers has also risen substantially following a surge in fuel prices, price hikes by manufacturers to cover BS6 costs, and costlier raw materials. The transition to BS6 norms from BS4 came into effect on April 1, 2020. This pushed vehicle prices across segments as manufacturers developed new engines that met the rigorous BS6 emission rules. In the year following the introduction of BS6 engines, the price of top models like Honda Activa and Hero Splendor and TVS Jupiter became costlier by 10 to 11,000 rupees. Meanwhile, passenger vehicle segment put up a strong show last year, with dispatches rising 13% to 3.07 million units. This segment has recovered to 91% of FY19 level. But this recovery was completely led by a stupendous growth in the sales of utility vehicles, given India is in the midst of an SUV boom. Sales of utility vehicles registered a 40% jump to 1.49 million units, while passenger car sales declined by 4.8% to 1.46 million units. India's automakers appear to have put the challenges of COVID-19 behind them, as sales surpassed 2019 levels in the month of May for major car makers like Maruti Suzuki, Hyundai, Tata Motors and Mahindra & Mahindra. Two-wheeler sales remained sluggish, but they benefited from some pent-up demand and wedding season in the first 2 months of the financial year. People returning to offices and reopening of educational institutions is also helping two-wheeler sales this year.
See, the growth momentum in the PV sales which we saw last year is seen continuing this year. In fact, growth could have been much higher last year, but for the chip shortage, which is continuing and got a bit extended because of the Russia-Ukraine crisis, with Ukraine supplying a bulk of the neon gas which goes into the chip manufacture. We're seeing demand for IT also continue, IT products, especially laptops, etc., and phones continues to be pretty strong. And the chip manufacturer's first preference is, give it to the IT sector. There also, we are expecting some improvement in availability from the second half of this year. So this year, we are seeing pent-up demand continuing both in the rural as well as in the urban markets. And that's driven mainly by UVs. Now we have the affordable UVs also, which is eating into the share of the sedans as well as the small vehicles. Assuming we continue at 12 to 14% or approximately 13%, we will cross the all-time high of 33.8 lakh units, which we registered in FY19. That will be crossed. We should cross about 34 lakh units this year. The cost of ownership, if you see, of two-wheeler has gone up by about 35 to 40% in the last 4 years. This is due to regulations, including the BS6, which came in. The hike in the insurance premium and the necessity to take insurance premium for 5 years for newer vehicles. Of course, then the cost of the inputs also has gone up, especially last year as well as this year. Income levels in rural markets also got impacted. In fact, last year, unseasonal rains impacted rural markets, and that impacted rural incomes. And because of the pandemic, we have also had shutdown of offices, schools and colleges in the past 2 years, which impacted some amount of urban demand, especially for scooters. This year, we are expecting that, assuming a normal year and no pandemic interruptions, we are expecting two-wheeler sales will register 5 to 6% growth.
While semiconductor shortage remains the major challenge for car makers, Maruti Suzuki chairman R.C. Bhargava has said the government's plan to make 6 airbags mandatory in passenger vehicles from October 1st will make small cars more expensive and drive out a chunk of potential buyers. Providing driving and front passenger airbags in all cars is already mandatory. Adding another 4 airbags will increase the cost by 17,600 rupees, according to auto market data provider JATO Dynamics. In some cases, the cost could be higher as companies will be required to make engineering changes to the car structure to accommodate the additional airbags. Buyers of entry-level cars are much more price sensitive compared to the bigger car segment. Meanwhile, the government also increased the third-party motor insurance premium for various categories of vehicles with effect from June 1st, which will jack up the insurance cost of cars and two-wheelers, making their on-road version more expensive. TVS Motor Company CEO K. N. Radhakrishnan said this will hamper the efforts of the industry to recover. Chrysal's Anuj Sethi says interest rates are still attractive despite the recent repo rate hike by RBI. Further, the reliance of two-wheeler buyers on financing is also coming down. From 70% pre-pandemic, less than 50% of new two-wheelers are purchased on EMIs, he added. On the other hand, a media report said on Thursday that India's top listed automotive and ancillary companies have earmarked 30,000 crore rupees for capital expenditure in FY23. Tata Motors this week signed an agreement to potentially buy Ford's plant in Gujarat Sanand as it looks to ramp up its production of electric vehicles, while Mahindra Group has committed 15,300 crore rupees for capex between FY22 and FY24. Last month, market leader Maruti Suzuki had announced a new factory in Haryana, the company's third in the state, entailing a total investment of 18,000 crore rupees.
I believe it is at least 30-35% higher than the previous year, and it's been driven by two aspects. One is largely OEMs in the passenger vehicle space would account for bulk of this capex. Because that is where capacity is being added. However, in the two-wheeler and commercial vehicle space, there is enough capacity available. In the two-wheeler space in particular, I think the investments are being directed especially for the electric vehicles. And to some extent, that is also happening in the passenger vehicle space. That apart, we expect this growth momentum will continue in the coming years also because of commitments made by OEMs under the PLI scheme.
Chrysal Sethi says that order backlog for passenger vehicles caused by chip shortage last fiscal year is expected to contribute to this year's high growth. He says the backlog could be anywhere between 4 to 6 lakh vehicles, but this figure could be inflated because consumers tend to make multiple bookings with different companies and not all of it would translate into sales. Sethi believes that the actual number could be closer to 3 to 3.5 lakh. Nevertheless, PV sales could touch a new record this year. He also said that some amount of inventory buildup is required by dealers, which could help OEMs in dispatches. The normal inventory level with dealers is about 25 to 30 days, which has now come down to 12 to 15 days. For the two-wheeler segment, although the expected 5 to 6% growth this fiscal is not impressive, especially coming after 3 years of consecutive negative growth, it would still mark the beginning of a turnaround.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.